Welcome to our deep dive this week. We have a really fascinating mix to unpack, from the Niva Bupa IPO to the impact of space tech, and even a look at why that former U.S. president seems to love tariffs so much. And yes, we'll get to that wild statistic about fake medicines in India. Ready to dive in?
Let's go for it. It looks like we're covering quite a bit of ground today. Finance, global economics, maybe even a bit of geopolitics.
Sounds like a plan. Let's start with the Niva Bupa IPO. They're a major player in India's health insurance market, and their growth has been pretty impressive. Their revenue has more than doubled in the last 2 years, and they've even managed to become profitable.
Yeah, and I think what's really interesting here is the larger trend at play. Health insurance is booming in India. There are a few things driving this, like healthcare costs are rising, awareness of health risks increasing, and there are even some government initiatives pushing people toward health insurance.
Makes sense. So, for anyone out there thinking about investing in this IPO, what should they keep in mind?
Well, it's always important to do your research and not just jump in based on headlines. It's key to look into the company's fundamentals. How sustainable is their growth? What are the potential risks involved? The FinShots article you sent me actually breaks down some crucial business and valuation metrics. It's a really good starting point for anyone who wants to dig deeper.
Definitely a must read for potential investors. Now, let's switch gears to the rupee. The data seems to suggest that it might be overvalued right now. You familiar with our That's the real effective exchange rate, and it's currently sitting around a 105 for the rupee.
Oh yeah, RER. Basically, that means you'd need around 105 rupees to buy something that would typically cost $1. And there's been some chatter. The U.S. government has even hinted that the Reserve Bank of India might be keeping the rupee artificially strong.
That's interesting. So let's break this down for our listeners. What does an overvalued rupee mean for the average person? How does it impact things if you're a consumer, importer, or exporter? What about the economy as a whole?
Okay, so it's kind of a mixed bag. A stronger rupee makes imported goods cheaper, which is great news for consumers who love their foreign products. But on the other hand, it makes Indian exports more expensive. That makes it tougher for Indian businesses to compete globally. It's a real balancing act for policymakers.
Makes sense. Speaking of global impact, let's talk about something that's quite literally out of this world: space tech. I was blown away when I read that NASA alone contributed a whopping $75 billion to the U.S. economy just last year in 2023. That's huge.
It's easy to forget about the economic power of space tech, but it's all around us. Think about it. GPS navigation, satellite internet, weather forecasting, these are all powered by space technology. And they've led to a pretty incredible space economy.
True, but it's not just about those everyday applications, right? There's so much more on the horizon. Space tech seems to be on the cusp of some truly mind-blowing advancements.
Absolutely. We're talking about things like space tourism becoming a reality, asteroid mining, even space-based solar power. These are the kinds of things that could completely reshape our economies and lives in the years to come.
It really is a fascinating frontier, full of opportunity, but I'm sure there are challenges too, right?
Of course. Launching and maintaining satellites and spacecraft is incredibly expensive. And then there's the issue of space debris, which poses a real threat to active satellites and future missions. We're talking about a growing cloud of junk orbiting the Earth. Not to mention all the ethical and regulatory questions that arise when we start talking about commercializing space. Resource extraction, ownership rights, it gets complicated fast.
Wow, so even venturing beyond Earth comes with its own set of complexities. Okay, let's bring it back down to Earth for a moment and talk about India's big push to become a global leader in electronics manufacturing. The government's been pretty clear about wanting to reduce reliance on imported electronics, especially when it comes to things like laptops and PCs. They've already had massive success with smartphones.
Right, they've gone from producing just 20% of smartphones locally to over 95% in the last decade. It's incredible.
That's a phenomenal achievement, and now they have their sights set on replicating that success with laptops and PCs. It's ambitious, but I'm curious about their approach. What are they planning to do?
Well, one strategy being considered is an import ban on certain types of IT hardware. The idea is to encourage or maybe even force global tech giants to set up manufacturing facilities right here in India.
That's a bold move. What are the potential benefits and risks of going down that road?
On the plus side, an import ban could lead to a surge in job creation here in India and help reduce our reliance on imports. And potentially, in the long run, it could even make electronics more affordable for Indian consumers. But there are some downsides to consider as well.
Like what?
Well, for one, import bans could lead to higher prices for consumers, at least in the short term, if local production can't keep up with demand. We could also see a limited selection of brands and products available if fewer international companies are operating in the market.
So there's a lot to weigh when it comes to this import ban idea. A lot of potential benefits, but also some risks that need to be carefully considered. Now, let's move on to a topic that often generates a lot of discussion, farm loan waivers. On the surface, the idea of writing off loans for struggling farmers, especially in a country like India, where the weather can be so unpredictable and agriculture is so vital, well, seems like a good thing.
Yeah, it definitely has that initial appeal, right?
Sure.
It seems like a compassionate and straightforward way to provide relief. But the question is, do these waivers actually help farmers in the long term? That's where things get a bit more complicated.
So let's dig into that. What does the research say about the long-term effects of farm loan waivers?
Well, some studies suggest that while loan waivers might provide immediate relief, they can sometimes create unintended consequences down the road.
Like what kind of consequences?
Well, for example, there's the issue of moral hazard. If farmers start expecting waivers, they might be less inclined to repay future loans, figuring another waiver is just around the corner.
That makes sense. So it's not just about wiping the slate clean. There are ripple effects that can impact the entire financial system.
Exactly. It can affect the financial health of the institutions that lend to farmers. If they keep having to write off loans, they might become more hesitant to offer credit to farmers in the future, which could hurt the agricultural sector as a whole.
It's a tricky situation. And then there's the question of who really benefits from these waivers. Is it really reaching those who need it most?
That's a good point. Some studies indicate that larger, wealthier farmers might actually be the ones who gain the most from these waivers, not necessarily the smallholder farmers who are often seen as the intended beneficiaries.
That's a really interesting point. It challenges the common assumption that loan waivers are primarily helping the most vulnerable farmers. Maybe there needs to be a more targeted approach, something more nuanced, that addresses the specific challenges faced by those smallholder farmers.
Right, there are definitely no easy answers here. But understanding these potential unintended consequences is crucial for crafting effective policies that truly support the long-term well-being of farmers and the agricultural sector in India.
Absolutely. Okay, let's switch gears one more time. This time we're going global, looking at tariffs, and specifically that former U.S. president's apparent love for them.
Right, tariffs were definitely a key part of his economic policy. Those extra taxes on imported goods, he really seemed to have a thing for them.
So what was the strategy there? Why the focus on tariffs?
Well, essentially, he used tariffs to try to make up for the revenue loss from those income and corporate tax cuts he put in place in the U.S. It was all about balancing the books, trying to offset those lower taxes with higher tariffs.
Makes sense.
Right.
But did it actually work?
That's a complicated question. Higher tariffs can have unintended consequences. For example, businesses often pass those added costs on to consumers, leading to higher prices for everyone.
Yeah, those tariffs have to go somewhere. And then there's also the risk of other countries retaliating with their own tariffs. Right?
Exactly. That's a real concern. It can trigger those tit-for-tat trade wars that can ultimately harm the global economy. Nobody really wins in that scenario.
So how could this approach to tariffs, particularly the ones implemented by the former U.S. president, affect a country like India?
Well, India is a major exporter to the U.S., so higher tariffs on Indian goods could really hurt those industries. And on the flip side, those U.S. imports could become more expensive for Indian consumers, too. It really highlights how interconnected the global trade system is. What happens in one part of the world can definitely have a ripple effect elsewhere.
It's like a delicate web, isn't it? It's a reminder that these policy decisions have far-reaching consequences. And it's something for all of us to think about, as consumers. Think about those products we use every day. How many are imported? How might tariffs affect those prices? Okay, we've covered a lot of ground here, but we still have that startling statistic about fake medicines in India to unpack. Remember, 30% of medicines in India are counterfeit. That's a number that's hard to ignore.
It's a huge problem.
Yeah.
It's something that really needs to be addressed.
Absolutely. So how does this happen, and what are the health risks involved?
It's a multifaceted problem. Really.
Yeah.
You have weak regulation, not enough enforcement, and then you have this complex supply chain, right? All that creates opportunities for these counterfeiters to slip in.
And what about the health risks? Those must be pretty scary.
They are really terrifying. Fake medicines, they can have the wrong ingredients, the wrong dosage, or even dangerous substances mixed in. So instead of getting better, people could experience treatment failures, have bad reactions, or even, yeah, it can even be fatal in some cases.
It's a chilling thought. So are there any measures being taken to address this? Are there ways to protect people?
Yes, thankfully, there are some things happening. The government's been working on strengthening regulations, improving those surveillance systems, and trying to raise public awareness about the issue.
What about technology? Can that play a role?
Oh, absolutely. Technology can be a game changer here. You see, there are initiatives using blockchain technology to track medicines all the way through the supply chain, making it much harder for counterfeiters to operate.
So there's hope on the horizon. But what can we do as individuals right now to make sure we're getting the real deal when we buy medicine?
A few key things to keep in mind. First, always buy your medicines from licensed pharmacies, those that are reputable. And double check the packaging. Look for those authenticity labels, holograms, anything that indicates it's the real thing. And be wary of prices that seem too low. If it seems too good to be true, it probably is.
Good advice. It's a reminder that we have to be proactive about our health. Wow, this deep dive has taken us on quite a journey. We've gone from IPOs and exchange rates to space exploration, international trade, and even the dangers lurking in our medicine cabinets.
It's been a fascinating exploration for sure. And I think what ties all these topics together, what makes it so interesting, is that it all boils down to interconnectedness.
Right. It shows how everything is connected, whether we're talking about the financial markets or technological advancements, government policies, or global trade, even our personal health.
Exactly. And understanding those connections is what helps us make informed decisions. It empowers us, helps us navigate all this complexity and engage in those meaningful conversations that are happening around us.
Well said. It's a reminder that we're not just passive bystanders, we're active participants in shaping the world around us, and staying informed is key to that. So as we wrap up this deep dive, I just want to encourage everyone listening, stay curious, keep asking questions, keep learning. This world is full of fascinating things to explore, and there's always more to discover.
Couldn't agree more.
So until our next deep dive, stay curious and stay informed. Thanks for joining us.
See you next time.